Hi, welcome back. And today I want to talk about contrarian trading and the art or the skill of contrarian trading. And there's no doubt that as I progressed through my trading career, became more experienced, I started to look at and embrace contrarian trades a lot more. I think it's fair to say that when we start out in this business, we're all looking to see what the big guys are doing and to jump on board with the others. It feels kind of the obvious way is to go with the herd, and we all get taught when we first start trading, the trend is your friend, that kind of thing. So I think it's understandable. It doesn't make sense necessarily, but it's understandable why most new traders will seek out those kinds of trades where you're going with the trend or with the herd. And it's fair to say that after suffering some losses from unforeseen events or getting carried out with the herd, I started to think there must be other ways of trading and look for other styles. This was really sort of further enhanced to me when my trading mentor, the person who taught me how to trade options, taught me how to be an options market maker, and backed me when I first went into the option pits of life. And still I would say to this day is the best trader I have ever had the pleasure of working with or coming across. And he once said to me, Gary, the trades that you make the most money on are the ones where you have the opposite position to the majority. And I think he sensed that, and particularly in pit trading, it can be a lot more difficult to go against the pit and the herd when you're in a pit trading environment. Something I might talk about at another point about how pit trading is quite difficult, and I struggled in that regard in pit trading. And he was just trying to say to me that you have to have this ability to be contrarian. Now, what he wasn't saying you should always be contrarian. He wasn't saying you always take the opposite position. What he's saying is you need to have that in your armory. And if you have that a situation where you have the opposite position to the majority and they are wrong, those trades pay off significantly. And so I started to look more and more as I progressed my trading career into contrarian trades, started to become more and more comfortable with contrarian trades. And I think it's to the point now where the trade that I'm most fearful of is the one where I have the same trait as the herd. So if I'm long, for example, equities, and everybody else out there is bullish on equities, that scares me. I am not so scared to be contrarian. But there's some things we have to understand about contrarian trading. The people that you see on social media constantly doom and gloom, constantly telling you the markets are going to crash, that's not contrarian trading, right? That's just looking for clicks and publicity. That's all that is. That's not contrarian trading. There is an art and a skill to it. Contrarian trading also isn't just seeing that your contract is overbought or oversold on certain technical indicators, right? That's not contrarian trading. Those indicators are unreliable and they're meaningless realistically. To be a good contrarian trader, you first have to understand that you need to look for evidence outside of the contract you're trading. That's why you can't use charting or technical analysis to become a contrarian trader, because with charting, you're only looking at information from your own contract. Okay, you need to look potentially for information, for evidence that's coming outside of your contract that could give you the evidence that a contrarian trade might be worthwhile. You need to be able to weigh up the positioning of your market. How are people positioned? What are the weaknesses in that positioning? Is there an opportunity going forward for that positioning weakness to be exposed? And that's where we start to look ahead. And you need to look at things like what data is coming out, what could possibly come out that would potentially show the weaknesses in the positioning or show the herd that they could be wrong. Again, if you use technical analysis, one of the underlying assumptions is that the market is ahead. That's why you jump with the herd. To take contrarian trades, you have to take the other perspective, which is what I believe in, is that the market prices in an outcome. It's not ahead, and therefore the market can be wrong. And so with contrarian trading, you're very much looking ahead to trying to work out what could happen in the future that could hurt the herd, hurt the majority of traders. And what you'll find is that when you start looking at markets like this, and obviously I'm talking about position trading here, not day trading, but when you start doing this, what you'll find is that some of the unforeseen events that hit a lot of investors and traders, it turns out that it's not that you can foresee they're going to happen, but you know that there's a better chance of these things happening. Remember again, the technical analysis, they don't believe in fundamentals. They don't believe that things like earnings and data and that are going to impact the market so much. They tell you to ignore all that the market is ahead, and that's their kind of excuse. Whereas I'm saying to you, absolutely, earnings, data, these sorts of macro events can definitely affect the markets, and therefore we're constantly trying to work out whether they can affect the markets, how the markets are positioned. And so we're trying to work this out. There's a lot of skill, a lot of judgment in it. And then we try to work out, what sort of probability can we put this time? And we try to work out if there's a good trade. It's not always going to be a case, okay? You're not always going to find that contrarian trade. And it's one important point. Contrarian trades, you shouldn't be doing lots and lots of them. If you selectively choose them, you can find some really good ones. So it's important to understand they are generally low percentage winning trades, but when they pay off, they can pay off big. So in that regard, you don't want to take loads and loads of them. But as you become more experienced, you start to see better situations. And part of that judgment is working out how good is the payoff. Now, in this, a product that is really good for contrarian trading is options. And I'm talking here about long option positions, because they have that payout where you have limited risk and potentially unlimited or large rewards. That's the kind of payout we want when we're taking contrarian trade. So long options and long spreads in options can all be really good trades for when you're trying to trade in a contrarian rate. Now, one important point is when you're trading options in this way is you don't want the options already to be pricing in this sort of opportunity. So what I mean is that for example, if you're coming up to company earnings, sometimes option prices become very high. They're bid up ahead of those earnings. So therefore, the options themselves are not offering the value. So you want to make sure that what you're thinking could happen is not already being priced into the options market too. I think, coming back to the initial point, a lot of people feel some sort of comfort in going with the herd, and they feel some sort of comfort in losing if everybody else loses. Personally, I don't find that comfort anymore. But in order to become a contrarian trader, you need to go outside of your comfort zone. You need to think independently and understand that sometimes you're going to be wrong with your contrarian trade. It's not going to make money. And the herd, everybody else has made because they were right. You have to be comfortable and just accept that. And I know some people that find that they don't like that if other people are making and they're not. But that's part of being a contrarian trader. That's going to happen to you. So you have to be an independent thinker and take yourself out of your comfort zone. So contrarian trading, it's not just constantly saying the market's going to crash, the market's going to crash. That's not contrarian trading. It's being selective. It's having judgment and working this out, whether or not there's a good trade out there. Again, this links to a Substack article, so I'll put the link in the description. If you like that, then please subscribe, and I hope to see you soon.